Joining us now to discuss the market action in crypto is Bitcoin Layer founder Nick Bhatia. Hello, Nick.
How you doing? Thanks for having me.
Thank you. So we actually have some kind of news-ish stuff happening, right? We have the Fed coming out with their minutes. Look, it's not really news. This conversation happened like a few weeks ago, and now they're like, hey, here, take a look at our minutes. This is what the Fed does. And it seems like they're kind of like saying, hey, we're going to get a little, we're going to try and curb in that inflation. But if it starts to do its thing, we're not going to go too crazy. Is that the proper read of this?
Yeah, it is. The Fed has, for several months been hiking rates, and they are quite committed on bringing down inflation. But at the margin, they are watching that the transmission mechanism for monetary policy is a delay. So between 6 and 12 months after the hikes, does the economy actually start to feel those effects? Now, the first hike was in March, but the Fed in this statement itself is acknowledging that the broader financial market really started to tighten in December. So that would mean that the first effects from the tightening would appear somewhere between June and September. And that's now. And so the Fed is looking at inflation coming down marginally, but also understanding that the period that's most affected by the rate hikes is happening going forward, basically. So they're going to be very closely watching monthly inflation numbers and to see how effective their policy is. And it's my belief that the Fed will pause their rate hikes sometime before the end of the year.
Wow. So, I mean, if that's the case, what does that mean for the likes of, we just talked about the meme coins and the excitement on taking on these risk-on assets. But, Bitcoin itself is a risk-on asset. So what does it mean for Bitcoin? What does it mean for the meme coins? What does it mean in general for crypto markets?
Sure. So I tend to believe that markets are leading indicators. And so I am an interest rate analyst. That's the world that I come from. So when I'm looking at treasury yields and the way that they behaved in June when the 10-year, for example, hit 3.5% and traded about 100 basis points lower from that point. We hit 2.5% just a week or two ago. That period in which yields topped was the market acknowledging that the Fed pause and the inflation slowdown is on its way. It's coming soon, maybe in the next 3 to 6 months. So that top happened in June. That's the market projecting that we are going to see the tightening end sometime before the end of this year. Because yields, I believe, put in their high for the year in June, I believe risk also put in its low for the year in June. Right. So we see stocks and Bitcoin performing quite well off of the lows in June. Bitcoin is up well over 30% during that time. And I think the markets understood that the Fed pause is on its way here. So I don't think we have any extreme reaction once the Fed does pause, but we are in this bottoming process in risk assets in which yields have topped, risk has bottomed, and the Fed will follow the markets and pause its rate hikes soon.
Yeah, kind of on a related topic here, that's the miners. You kind of see things recovering. Look, these guys have had some pretty steep losses over the past few weeks and months. And we're also coming upon a situation where the second largest cryptocurrency, Ethereum, is about to switch to proof of stake from proof of work. That's one less major coin for them to mine here. But you think they're on the way up as well. What's going on there?
Well, we have to look at hash rate. That's the indicator that we use to see our miners joining or leaving the network. And right now, miners have stopped leaving the network. We had a big drawdown in hash rate during this bear market that we've seen this year. But once the miners decide to stop leaving the network, it usually tends to correlate with Bitcoin finding a bottom. So if we look at hash rate specifically, and hash ribbons, which is a way of looking at the moving averages of these hash rates, we can't claim that a bottom is in for sure yet, but we see that bottoming process happen right now. So that's something that we covered at the Bitcoin layer today.
Now, you're also seeing coins leave exchanges, which it generally tends to be a bullish sign, but it could also mean some wariness about what's going on in the exchanges, particularly after some of these major collapses of lenders, et cetera, where people are starting to worry about who's holding on to their crypto and how they're using it and whether or not they can access it. But does that translate at all into anything with crypto? And also, what does it mean? Where do you price this? Where do you think things are going to go over the next, say, month to end of year?
Sure. So when we look at exchange flows, that's just one part of the mosaic. So right now with exchanges seeing declining balances, it means investors are taking money, they're taking Bitcoin off of the exchanges after they've purchased and tucking them away. That would indicate that we'll have a tight supply when demand comes back into the market. But it's just one piece of the puzzle and something that we look at to try to get a sense of overall market behavior. What is my outlook? My outlook is that we did see a bottom in risk assets in June because of the Fed bringing back the tightening of monetary policy. I think that the worst of the tightening is over, the worst of the inflation is over. And so another leg down, drastic leg down for risk is not in the cards for us this year. So that's my outlook. I think that Bitcoin will continue to grind through the 20,000 range, where it really has never spent that much time. This is its first orientation with the 20s, because on the way up in 2017, barely any time from 10 to 20K and then back down, back down to the 10K average level. And then again, in 2020 on its way up, kind of just blew past 20 all the way to 30, and then ended up spending quite a bit of time in the 30s, the 40s, even the 50s, but never in the 20s. So it will take time for the market to digest price action in the 20Ks here. But I do believe that we will break out and head higher sometime, maybe by the end of this year or into next year.